We have to start with what's happening in the US. I know it may not have direct impacts as we're already seeing from the NSE futures, but can you give us a sense of how this plays out for the world in terms of market sentiment?
Sure. Amit, it's great to be here. See, the world is looking at the US shutdown coming to an end with a sigh of relief, like any parent who's pleased that the toddler's tantrum has finally ended. Because the US, with its partisan politics, has really held the world to ransom. So the sigh of relief will translate into a possible immediate jump in equities in the US, as we've possibly seen. With the perspective of India, I think what's really hot on the burner is the trade deal. And there's been some feverish activity behind the scenes over the last few weeks to get some kind of closure, just as the US has done with China. And what we're hearing in the corridors of New Delhi, that we are very close to inking that deal. And the Indian government is waiting really for the Bihar elections to be completed, because it is believed that there have been some concessions made on the very tricky farm subsidies that Mr. Modi has been very particular about so far. And both sides have given some concessions. So once the US shutdown is over, people are back at work, and the Bihar elections are over, we could very easily see a remarkable US-India treaty. We are looking at tariffs in the range of just under 20%.
All right. This is very interesting that you brought this up. For our audience, the Bihar elections, an eastern state in India, the poorest state in India, perhaps the lowest per capita income, critical election. The results will come by Friday, November the 14th. And you're saying that Mr. Modi, the Prime Minister's office, is effectively waiting for that to kind of go away and then have repercussions around agriculture that might be faced by the BJP, by the ruling party, in terms of political repercussions. The market, though, will not care, will it?
Oh, not so much. In fact, market always has the unique ability to look through the short-term haze into the future, and that's certainly good for India. Because India has been in the state of funk ever since the additional tariffs were announced mid-year. And the businesses want to just move on, get on with it already. And from that perspective, having a deal which is sweeter than the 25% we have in place and the additional tariffs, it's certainly going to be welcomed by the markets.
All right, just paint the picture for us. Look up in the sky. Tell us what the investment sky really looks at for India, given there's an AI bubble valuation scare, or there is this shutdown that is supposed to end now, nearing an end. And there are other concerns around, earnings reports. What is your general take on the India market from the lens of an international investor?
So the international investors for the last 2.5 years have been largely risk-off. And they've been so enamored with the returns they've received in the US, particularly the tech space, that there's been very little incentive to look outwards. China did really well this year, and that position has been rewarded, but not generally all of emerging markets. India, we've had, I think, 3 positive months of foreign inflows this year: March, May, and October. So overall for the year, foreign investment in India has been negative $17 billion. Yeah. That is changing because of the earnings season we just had. Almost 80% of Indian companies have announced their September ending quarter results, and we have seen a remarkable uptick. Almost a 2% increase in earnings projections, so positive surprises for the large part, which will bring back into focus that India's valuations are not as expensive as they have been historically for the last, let's say, 7 or 8 quarters. So we are looking back on the cusp of a growth phase which is coming through, and with the trade deal and a general sense that India's inflation is half that of the US. India's inflation September number is 1.5%. US is still at 3%. And that general shift that EM inflation, or the global south inflation, is less than the developed world, gives central banks in emerging markets far more latitude, and certainly for the RBI.